Hello and welcome. Let's take a quick look, at least quick look for me, on the gold and silver market. Today's date is the 23rd day of August 2019. Like always, all bets trades of the like within each his own risk and their own reward. Let's take a look first at the hourly chime frame within gold, which started to break at 8 o'clock in the morning and has been continuing it very, very well. Within chart action, one of the things that's always important in significant up or down moves is how it reacts to such an event. And we're going to get more into that when we go to the longer term time frame. But I like short term so far how it's doing it. It's at that situation of, oh my goodness, are we going to have any resistance here at 1507 where we're at now, because it was resistance right here at the 7 hour timestamp 3 days ago, and again on 3 days ago at the end of the day, 1600 hours in this point. It was close to this level here on this failed breakout on the 2 days ago at 1400 hours. Not quite, but it's in that area still. So this is the part about technical analysis I've talked about before I don't like, as far as where I predict where we go next. But that is because it's back to this area, haven't been there for a while, probably a fast move to get there, everything's in play. I do see that we've had a correctionary phase though. Just by looking at this, what I notice is the previous period, and it's breaking out nicely now. We'll see how, barely, I suppose. But last period, it hit a high of 1507 and a half, which is in that area. But I can see that it came back within the period to close at 1505. And here we see it breaking up another dollar, $2 higher, pulling back down to 1502. So I've already seen that it's resisted that area nicely. And that without even looking at it yet, I know we're going to see a nice little up and down V-shaped formation type thing of some sort. Of course, back up again. So let's take a look at the 15 and see what we can come up with for it. And now it's just having that beautiful breakout within this period. But you have this high at 1507. There's a pullback at 1501. Let's take a look at this again. Yep, that's what it is, 1501. It's not much of it, but very much volatile in here. A lot of choppy back and forth action, but the price action has now gotten above this high. A lot of consolidation amongst that area. So when we go back again to, what was it, the hourly before? We'll get to that daily in a bit. So let me just draw the line that I really need to see it, probably around here. So there you have it. So the spot coming up in here. And when you look at markets overbought, oversold, see around here, it's like, oh, we're at that area where we should find some resistance. And then we had all of this happen. And if you're waiting for the clear break situation, well, when did it get clear? Roughly, you can see it was just happening in here. Just hold, and you got to be fast. So if you got in on the clear break, you should have already been in by now, as it's already up to 1512. And that's, of course, if you're playing that type of game. And okay, we're looking for. We've got this noticeable break, but it's so well overextended on the hourly, but it can continue to be so, of course, until it's not. Meaning, this hour could finish off up to 1522 on its next move. Very, very easily. And it could happen in 20 minutes or even two. Maybe not as much in two, but still, you get the idea that you would have a fast move because of this very large break of established resistance. And as far as markets holding and staying above levels, I think it's probably better if I show it this way with a lot of periods. Then I'll focus on the 18 thereafter. But this was again that clear break above this resistance. Fibonacci was in at 1321, but it really needed to clear above that 13 and 2/3 level and hold and stay above it. Well, it has done a marvelous job in holding and staying above it, because what it didn't do was come up here and then just come back and find some support at this level. It still might, though. Or when it first got above it, just stay for a lot longer, because it only congested in this range from June the 25th through August the 1st. So only did it for like the month of July. And when it had this failed breakout, it successfully corrected it, getting it above it, strengthening of this resistance. Just a really solid move. And now, since hitting this level of resistance at 1522, it's been holding and staying in this area for quite some time. And it's not resisting it, like, at least not as of yet, to a negative point of view for price action on a bullish level, where we just start to see noticeable lower highs. As it is, it's looking like it might want to attempt to leave this 18 average of highs, which is pretty much exactly where we may be now. Right now it's 1511 high change, 18 highs is in at 1511 low change. So it's just attempting right now to make a break above it, and in a situation as we are seeing, and in the past results and the past movements in here, when it's had all of this consolidation for quite some time, now you have these two red down moves, 2/3 percent down in one, and little over one, so 2% in the 2 days, which I guess for gold is noticeable. But to just hang in there, how does it react to this fact? And again, we're seeing how it's getting above these short-term levels of resistance now. So I wouldn't be surprised if we are making. I think it's going to make a tended move to 1522, and I wouldn't be surprised if it breaks it. But by seeing this again overextended on the 18, oh, it's got to. If this thing doesn't correct on any pullback, and I would be surprised if this is a failed breakout. And then well, I mean, it can go below the 18 because of the fact that if the 18 goes up so high, that's a different story. But it's got a few periods for that to happen. But what does it need to hold? Well, definitely the area of around 1507. But you know what? We can fall down to like 1500, even 1502. If it holds in that area there, that would just be a higher low from these all these lows back in here around 1494. But a clear, definite, big statement has been made here on the gold market. Even just this 1 minute, we were seeing it right now. The 1 minute time frame, this thing could easily go right now, because all of these great plethora of green candles up in a row. How many straight green candles up is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And notice three of the last four and the last two, how much more volatile they end. And then we have a little red one down, nice little green one up, a pause one, and we're really doing a lot of this pausing now. Although it did look like here that it was uh, that one noticeable moment that it was breaking up. Because if you see here this thing going off from this, then this thing could fly for a lot more periods. And we could see like 15, 18 in like a minute. And then, as I mentioned, 1522 to happen so fast. Well, how much does it have to do to get there? It has to go up like 8 points. That's a half a percent. And a half a percent on 1503 would be like 8 points. So a half percent is like here to here. So it did that in like, well, 7 or 8 minutes. Okay, let's switch this off to silver. Let's see how it's running over the last few minutes, because it was showing a lot of the similarities when I was looking at it earlier. 1726 is looking prime. So we can see it's breaking out nicely amongst its 1 minute term time frame as well. What does it mean on its hourly? Well, it got above its level of resistance just like gold. And on the daily chart, well, just like it as well, but more noticeably and much more above it now, exitation of the 18 average of highs. After all of that, we hit this. Originally, we hit close to this high area. Resistance was first established on August the 7th at around 1721. Then it was upgraded to 17 and a half on August the 13th. And after that, it basically resisted right where we are now, because we have all of these resistance hits in here from the 9, and this is a 3 hour time frame. So from August 14th morning all the way to August, the end of the day on August 15th. So a day and a half, day and good, better part of 2 days. It resisted this area, and then of course it pulled back down to establish support. And then after resisting in here, lower than this level, successfully correcting within the 18, and now we're having that move up to this previous level of resistance. Very, very important for short term to hold around 17 and a dime, that little ballpark area. Yeah, 17 and a dime. And then getting above here, the next level is 1750. But again, as we're talking about long term, this could go wild when you're having excitation of the 18 like this on the 3 day term time frame. Obviously, in an uptrend, having a very small correction. I say small correction because it's been a few periods. It has not made any move to hit to the 18 via price or time, which meant its price moves down. Hasn't been anything of a large, glorious move. It doesn't need to be. And the amount of time it's been of going sideways in this range hasn't been that long either. But just like this, when you see breaks of established resistance here, like again between the 17 and a third and 17 and a half, then you would expect it to have a good gain. And on the weekly chart, also in a bull run, and we came up to this previous congestion area really back 2 periods ago. So it's been hanging and staying within it. So leaving this congestion area, what's the next key level? Well, definitely 21, but is there anything on the way? Maybe a little bit at around, just basically a half, like halfway. 18, getting above, this could go like dollar and a half very easy. I'd think 18 and change even though. But at least 18. At least 18 as its next target on its way to 21. Excitation of the 18 average on the weekly term time frame. This is the second time it has attempted that since the $50 top, and well, not really since the $50 top, but since it actually had excitation to the downside in 2013. Because this is what originally took the market down bearish when it was breaking down below 26. And throughout this whole time, resisting the 18, but getting above it here on April 2016, establishing this level of resistance, all this coming back to support. And I mean, it's usually from failed moves comes fast moves lower. I mean, it failed in this consolidation here, but this is all it did was come back to this level, and even close to a double bottom situation in here, like two U's and two V's, and well, it's already broken past that neckline a little while ago at that 16 and change mark. But obviously underperforming gold, but yeah, this would be the second attempt, and if it's successful, then you'd expect a pattern of higher highs and higher lows. Other times it has had it before, at least on the monthly chart. This is resumption of trend, not reversal. For your up move. Okay, so band flatten out, establish support, come back to the band, but it didn't go over, so failed breakdown here. And the excitation of it was announced. Okay, because it got above the 18 average of highs in May of 2009 when it got above like 15 and change. And it was overextended a little bit, you could say, but obviously because it went down. But then it came back into this correctionary mode, enough for this 18 to reflatten out. And there was the excitation here on September of 2009. And it was successful because it's held, stay within this. Basically showed continued to show a lot of strength while in retracement mode amongst the 18. Retracement mode was because you're in this high and this low. Once you break this high, you were no, at least for this time frame, you were no longer in retracement mode. You were in setting new highs. And I say for this time frame because technically speaking, we've been in retracement mode from $50 to 4 since this entire time in here. And then when it left the 18 average in here, obviously it was a failed breakout in here. You can't see the data beforehand. But there was excitation on the May of 2002, and it worked out to be successful. Again, it did so in here after the successful correction, and then when it did it in November of 2003, then it was truly, truly off to the races. And back then, silver was $5.20. Now it is about triple that. How many other things in the real world have tripled in price over the last 16 years? Speaking of which, how many other things are down two-thirds in price over the last close to 40 years? Well, silver is, because it was $50 back in January of 1980. And we'll finish this off within the gold to silver ratio within the monthly chart. Up, of course, at the upper end of this range, having a leg higher now, just at the 18 average of highs, where there's been I mean, no, certainly a noticeable easy. I mean, I'm not going to draw a correct, but you can just tell in here the rate of ascent. It's at that line where it would be. I think that's the best way of putting it. On the daily chart, there's the one of the many rallies that gold has been having since this low, but at least from this 2019 low, you had a nice little run, but a huge, huge reversal in trend. For it lost everything that it gained in like from like May 6th to the middle of July. So everything it gained in 2 months, it lost in a couple of weeks. And then what's happened after the fact? Well, you have one of the rallies you expected at some point. So you're expecting it to be a lower high rally. Lows and highs are known after the fact. And this one isn't, to me, isn't even confirmed completely that this is a high. This is a low. That's confirmed. And most certainly this is a high in all the lows and highs before that. But if this price action doesn't break down below this line, and this is just a sideways range, it gets above here and above that, then I'm gonna change that high to whatever this one here happens to be. But if I get a clear, concise break below the 18, then I'm going to say, yep, this is the high, and now we're going to figure out where the next low is going to be. And in a situation like that, where you have this high, this low, you have that rally that you expect, because you know what's got to happen. When you have a precipitous capitulation style sell-off, I don't know what word they'll use to word. I guess lack of a better terms, I'll use capitulation because it's really not. But it's just fast and furious selling, or of movement in one direction, regardless if it's buying or selling, it's all the same still. But you have that selling, you have your rally that you expect, you just do the sideways stuff like this for a bit, support resistance is established. If this move breaks down below to the lows after this and here, then I wouldn't be surprised if we're talking about testing at least down in here. Fast and furious again wouldn't surprise me, or at least a concise move to a new leg lower than 85 and high change. Thank you for tuning in and have yourself a great day. Bye bye.